Greetings from welcome aboard. Joseph James here. School of Trade, Sideways Markets. Happy Monday to you guys. Hope you guys had a good weekend. It's May 23rd, 2011 on another manic Monday here. Well, it wasn't that manic, right? We always know Monday mornings are always kind of the same. The same reason why you and I are rolling over, hitting that snooze button on Monday morning. The same reason why you and I don't want to finish our weekends is the same reason why most traders come in a little bit late on Monday morning as well. Not to mention, OPEX was last Friday, and this is also a short week. Well, a short week in the sense that we've got a couple days later on this week will be closed because of the long weekend ahead of time. We've got Memorial Day holiday coming up this weekend, which of course here in the U.S. is one of the biggest holidays of the year. It's the unofficial kickoff of the summertime. So this week's going to be a little bit hairy sometimes as people are kind of getting out of town ahead of that long weekend coming up. Monday morning though, Monday, Tuesday, Wednesday, we really shouldn't be dealing with that much this morning. But it was a Monday, and like most Mondays, we expect a slow start to the day. It was compounded today because we had no news today, so no major news this morning. But do you recall what we saw this morning? Right? What we saw this morning was this big drop down on crude. Right? Gold was going pretty sideways, but crude had managed to drop all the way down, right, down to the previous lows. And so right away, we dug right into crude oil this morning. Okay, we had some slow price action, so we took our time. We went through our morning routine, checked the dollar. What did we see in the dollar first? Sideways dollar. But more importantly, what did we really see in the dollar today? Open up your 89 range chart. What did we see this morning? It was screaming at us. Sellers had failed. We had already seen how the dollar had fallen new lows, tried to keep dropping, came right back up and going sideways. What that told us was expect a sideways range. But more importantly, right? More importantly, we saw one attempt to drop on the dollar that failed. Now think about this. We got two, well, I'll call it clue number one, but we got two really important clues here out of that move. One was the dollar had already tried to drop once and failed. Now, at that point, we don't know whether it's going to keep rising or whether it might come back down again. Right? We may have price on the dollar try to push new lows again. That was the first clue. The second clue then came on crude. And on crude oil, we found ourselves at the bottom of the wedge, the bottom of the sideways range. And also, number three, we saw a bear channel. So three important things this morning. First of all, we saw the dollar going sideways. Sideways dollar, but very important though, it was a sideways dollar with a lower low right in the middle. And we looked at it and we said, now that's telling us something right there. Either A, this is going to keep dropping back down, or B, it'll keep going sideways. Either way, we knew to buy the lows and sell the highs on crude. But we really didn't have much of a clue as far as direction went, did we? So what happened? We grabbed the crude and we saw right away two things on crude, sideways range and a wedge. We're at the lows of the wedge. Then we saw a bear channel. Bear channel means lower lows, lower highs, prices coming down on the crude. So we had the dollar going sideways, right, that it dropped and come back up, right, and came back up in. That told us if price drops again, we're going to be buying, right? If it keeps going higher, we're going to be selling. That was clue number one. We saw that a mile ahead of time today on the dollar this morning. Everyone this morning was seeing it with me. Then, at the lows of the wedge on crude, we knew what? Buy those lows. We then saw the channel on crude as well. What are we going to do there? Sell the highs of the channel, a bear channel. So we knew, based upon a very simple, right, analysis of the crude and the gold. Again, we went over the whole thing together this morning at 7:45, and we said, all right, if the dollar wants to jump, right, we're going to keep selling new lower lows using this bear channel. But if the dollar falls down, we're going to buy the lows of the wedge, keeping a close eye on the top of that channel. And of course, what happens is we make a new higher high. I'm at the lows of this wedge. Remember, I've got a wedge pattern here, right? We marked it up on the morning prep this morning. I'm going to make a new higher high, right? I skipped the first one here, took the second one because that's what made that higher high. Then I bought the pullback, final target at the BMT, right? Nice, easy trade here, guys. 942, new higher high, buying those lows, BMT is your final target. That's a real easy one here. That made us 39 ticks for our first trade of the day. That was one of the easiest trades we had all day today. Easy final target, top of the channel, BMT, plus 5, plus 11, plus 17 is 39. So 10, 21, right, 39 there. That's actually 11 right there. And at 9:42, we're buying pullbacks following our plan. Our plan was at the lows of the wedge, we're buying the lows, and with rising prices, right, we're buying pullbacks. Now check your chart. At this time of the morning, 9:30, the dollar was coming off of previous highs. Dollar was short-term dropping. And of course, the dollar is, what have you done for me lately? Okay, I'm not caring about what the dollar did yesterday. I want to know what's happening right now. And so at 9:30, dollar is dropping. I buy a pullback 1. Take profit off at the BMT. Now look what you see here. This is going to be your top of the channel. Now, of course, I originally now want to sell the top of the channel. Right? I want to sell the top of this channel right there. So what do? We break through, right? No sellers there. Buy a pullback. If I would have saw sellers, I would have sold the highs there. But instead, we make new higher highs. I then buy a pullback with that new higher high. Again, with dollar dropping, right? There's wave number 1. Final target off here. We break above the top of the channel. Again, looking to sell first, but we see a big breakthrough. There's your wave pattern 2, right? 9:55. This one, as you can see, not nearly as much. It quickly here fails and comes back down. So we got 10, 21, minus 4 is 17. So again, new higher highs, buy the pullback. Now that's off my 13 range chart. You can easily see that wave here now off my 13. It's an easy wave to see. Now imagine for a second now you've got yourself a trigger line here, right, off a 21 range chart. So here's my 21 range wave now, 10:05, 97.58, got a plus 6, minus 6, trapped as you can see here. That second trade here, again, first trade was the 13 wave, it's easy to see. Second trade though, this was a 21 range wave, right? A little bit more difficult to see on this chart, but obviously you can see the picture I'm trying to look at here. And again, there's the entry point right there. Get above the BMT, get above the trigger line, and again at 11:05 here, right? It's a plus 6, minus 6. We get in, we take our first target, move stop to entry minus 5, got stopped out, entry minus 6. A little bit of slippage there.